so I want to start here talking about Palantir stock. So what is so shocking about Palantir stock right now? Okay, listen, this is huge. Palantir is holding every gain that it was supposed to give up, right? You know, the bears have been predicting the stock was going to crash, it was going to crash, and it was going to crash. And at first, they had a victory, right? And it was very comical to watch this all play out. Let me pull up a 1 month chart so I can illustrate this a little better to you guys, right? So Palantir had a little downfall, and that got all these people really excited. When I say all these people, I'm talking about the bears, all the people. Palantir's got to crash. Palantir's going to crash, right? And the stock went from 65 down to about $60, and they were saying victory, saying, "I knew it. I knew Palantir was going to crash." And now Palantir is just as high as it was previously. It's pretty much right around a new all-time high in the history of the stock. And so all the doomsday folks that are always saying the stock's going to crash, are wrong again. Listen, in regards to Palantir's stock price, right? If we're thinking about when is Palantir's stock price ever going to crash, I'll tell you when it's going to crash. One scenario could be the whole market crashes. That could bring down Palantir, sure. But you could always say that about every stock. Like, if the S&P 500 goes down 30%, guess what's going to happen? Every stock's going to get pretty much trampled in that market. That's just what happens, right? What else could cause Palantir's stock price to crash? The other scenario would be growth rates, revenue growth goes back under 30% again. Let's say they had a quarter where they had revenue growth at 24%, 27%. Yeah, if Palantir is $60, $70 a share, it's crashing in that sort of dynamic, and it would be right back down in the 40s. So yeah, if you go from 65 to 45 or something like that, it's a pretty significant crash. So if that were to play out, yes, Palantir crashes. What else could get Palantir to crash? You don't crash a stock based on valuation alone. Can't do it. Ask any great short seller, which is not many because it's a very tough business. It's the most brutal business is short selling. Much easier to be a long stock picker. Trust me, you'll make way more money, and it's way easier than trying to be a short seller. But if you ever ask any successful short seller, what is one thing you never short on? Valuation alone. You need it to be high valuation with a fundamental flaw in the company. Maybe there's some sort of accounting issue. Maybe the business model's revenue growth is going to tank, or the profit growth, or the margin growth, like something like that. You need something like that to crash a stock. Just because the high valuation, that's like saying Costco. Costco trades at a ridiculous 50 forward P right now. I think it's even higher than a 50 forward P. It's just insane. It's freaking Costco. Like, what are we talking about here? But to bank on just like Costco stock's going to crash because it trades at a high forward P doesn't work like that. You need something to go wrong with Costco's business model to really get that stock to crash, or you need an entire stock market crash to get that stock down. To hope you're going to get that stock to crash 20, 30, 40% just based on valuation, it doesn't work like that. It never has worked like that. Anytime a stock crashes, it's not because of valuation, it's because there's a flaw with the company. SMCI looked like it had a really rich valuation, right? But you couldn't get SMCI stock to crash just on valuation. You had to have something fundamental. Then all of a sudden the accounting stuff happened with them, right? And the stock crashed like, I don't know, what was it, 70, 80, 90%, something insane, right? That's what happens. So all the people predicting Palantir crashes, it's real interesting. I'll tell you that. It's real interesting. It's real entertaining. And then they go around running victory laps because the stock went down a few percent, all for it to basically, it's going to be closing today likely at an all-time high or very close to an all-time high on that stock, right? And the same people on X were posting victory laps that were getting 1 million views on X a few days ago, right? Crazy, crazy. All right, next up here, why is Bank of America talking about Palantir's stocks going to $75 here? Well, Palantir Technologies rose on Monday after Bank of America reiterated its buy rating and upped the price target to $75 from $55 on the software company, citing accelerated U.S. growth and widening competitive moat. The analyst noted Palantir has shown its ability to digitize enterprises in battle spaces from finances to missile production. Quote, in a world where efficiency, innovation, safety, and speed are the most valuable assets, we see Palantir as an enabler and winner in this new era, said the analyst. The analyst is raising the next 3-year government revenue growth to 29% from 24%. Software has become a critical asset in the industrial production, enabling automation, data analysis, real-time monitoring, and process control. Software represents 17% of U.S. non-residential private fixed investment versus 11% in 2005, according to analysts. I'm actually surprised it's not even higher. The analysts think Palantir is poised to dominate as companies turn to software and AI to grow margins rather than through scale with fixed assets. The complexity of the company's ontology is invaluable to the operationalize. Oh my gosh, I cannot pronounce that right. Operational. Damn it. I can't do it. I can't do it. Like, I'm sorry. Like you tell me how to pronounce it, okay? You tell me how to pronounce it. Generative AI, as it enables the security, governance, and data robustness challenges. Bank of America noted that even with the surge of new commercial customers, partners, and distribution channels, it sees a long runway ahead. The analysts raised their next 3-year commercial growth to 34% from 32%, so that means an even acceleration from here, right? The analysts think Palantir's penetration in both government and commercial applications is early innings. The incremental value-adding use cases, they could have just watched my videos 2 years ago. They could have just watched my videos 2 years ago. They could have watched my videos a year ago, and they would have been on to this, right? They're late to the game. Now, this is what happens with the stock. And you got to understand what's going on here with Palantir, right? This is what happens with the stock. You get Wall Street to come in very late to the game. And it's funny because all of a sudden this year, 2024, has been the year that all of a sudden analysts are jumping over themselves to talk positively about Palantir and to raise price targets. And finally, they suddenly get it. But it's why were they not paying attention before now? Why not? Why weren't they paying attention back when the stock was $8, $10, $6, right? $12. What? Where were they at? Where were they at? But after the stock makes an epic run, it gets in the S&P 500, NASDAQ now, all of a sudden, getting in the queues. All of a sudden now everybody's running over themselves to talk Palantir. Oh, I'm putting out $75. They're late to the game. The big money has already been made on Palantir. Doesn't mean there's not going to be money to be made, but the big money's already made. No different than Meta stock, right? Meta stock, it can still be a moneymaker over the next few years, and it will be a moneymaker over the next few years. But the big money, you already missed it. The stock was under $100 back in 2022. This time last year, it was 2 years ago. This time 2 years ago, Meta was less than $100. Now you got to pay, $550+ for that stock. So there's still going to be a moneymaker, but it's not the crazy money. Palantir can still be a moneymaker, but it's not the crazy moneymaker anymore. People that were buying the stock at $6, $7, $8, they got the 10x. The people buying it now, they're hoping for maybe a 2x or a 3x on the stock. There's a difference, right? Late to the game. Wall Street's late to the game. Again, that's why you got to beat Wall Street to the punch. You got to beat Wall Street to the punch. You got to look for the opportunities when Wall Street doesn't see the opportunities or they don't care about the opportunities. That's why right now, what do you see me buying? Great value and dividend stocks. They're not looking at those right now. They're too focused on what have been the hot things. They're focused on Palantir. They're focused on, Tesla, whatever, right? And that's fine. Cool. Keep bidding those stocks up. Those are big positions for me. I would love that, right? But the moral of the story is you got to look to where Wall Street's not looking at that particular time. Because all of a sudden, a year or two later, they're going to be all over that, right? They don't care anything about these value and dividend stocks right now. And watch out. A year from now, 2 years from now, I bet you, they're going to be all dividend this, value that. This is where you want to position in the market. Yields are going lower. You got to find yield, dividend stocks are the play. Look at how good they're doing in the market, blah, blah, blah. Just watch. Just watch how it plays out, right? You got to beat them to the punch. So, no. Is Bank of America correct in regards to kind of their thought process around Palantir? Yes, they're 100% correct. But they're late. They're really late. We were talking about this a year ago, 2 years ago. So they're just late. That's what you got to understand. They're not wrong. They're just late. Very, very late, right? It's no different than saying, this football team over here I think they're going to beat this other team by 20 points, right? And then some guy comes in the fourth quarter and that team's beating the other team by 20 points. And man, I think that team's going to beat them by 20 points. You're like, yeah, where were we at before the game? How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community where we're constantly keeping in touch with each other, talking about what's going on in the market. How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area. So let's get into this. Palantir stock is set to soar after November 26th. Now, how do I feel about this? Well, we got to understand, very important here, we got to understand why so many people are predicting that Palantir stock is going to go on another epic beast run here. And the reason people are now predicting that is because of this. Palantir is leaving the New York Stock Exchange for the NASDAQ. Now, the NASDAQ, it's really the place you want to be nowadays. It honestly, it gives you, in my personal opinion, it gives you a lot more, let's call it investor interest out there when you're on the NASDAQ. You get more publicity being on the NASDAQ than you do in the NYSE. At least my opinion personally is that, right? Like if I had a company like, I don't know, 1000xstocks.com and I was going to take it public, New York Stock Exchange or NASDAQ, honestly, nowadays, I would go NASDAQ. You know, maybe 20 years ago it would have been different, but nowadays, I honestly feel like NASDAQ's a better route to go, right? So Palantir stock gaining Friday on plans it switched to listing from the New York or to the NASDAQ from the New York Stock Exchange. Investors seem to be hoping the software company will gain from the stock getting added to the NASDAQ 100, which is a QQQ, which is, you know, very widely invested. I know a lot of investors that will buy the Qs, no different than a lot of folks buy the S&P 500 index fund. There's a lot of investors that view the Qs as a better reward profile over the next 10, 20 years. So a lot of people that have a further time horizon, let's say you're in your 20s, 30s, 40s, a lot of those folks might rather just put money in the Qs, it's called QQQ, which is the NASDAQ 100, rather than put money in an S&P 500 index fund. And they think they'll get much better gains. And I got to be quite honest with you guys, like if, you know, obviously an individual stock picker, I'd much rather pick individual stocks and pick the best stocks in the Qs or the S&P 500 or whatever to invest in, right? But if you told me I had to invest in either the QQQ, right, or I had to invest in the S&P 500. To be quite frank with you guys, I would invest in the Qs over the S&P 500. Look at the 5-year returns for the Qs versus S&P 500. You're talking about 158% for the Qs versus 97% for the S&P 500. But let's back it up further. Let's take it back to, you know, why don't we take it back to about 10 years? That would be good. Well, it looks like, I don't know why Trading Views chart. Oh, maybe it's because WTI is here. Maybe that's what I need to get rid of. Oh, is WTI on it? Let me get rid of. Let's go to, I don't know, Tesla, okay? And we'll take it back here. Well, let's go to Apple, because then we can take it back way far. So let's check out a 10-year chart here of the Qs versus the S&P 500. So right about here, so 10-year, you're looking at about 280% gains for the Qs versus 123% for the S&P 500. So the moral of the story is, like, if I had to guess what outperforms what over the next 10 years, and you forced me to invest, as I said, Jeremy, you're not allowed to buy individual stocks, only some sort of index or ETF or something like that, I would go the Qs over the S&P 500 any day of the week if I had a long time horizon. Now, if I had a short time horizon, I might be more inclined with S&P 500 if I was later in life, something like that. But I'm like, no, I would definitely go Qs over that. So this is a huge moment for Palantir, and there's going to be massive forced buying coming into Palantir stock in the short term. And it's just, there's not a debate around that, to be quite frank. There's no debating whether there's going to be a bunch of money flooding into Palantir. It's basically just, you know, pretty much factual. At this point in time, there's going to be a lot of money flooding into Palantir stock in the short term, right? And honestly, over the longer term as well when it's in the Qs, especially getting that it's going to go in as likely, it's going to go in somewhere around the 30th biggest stock in the Qs, which is a whole other big deal, right? Now, additionally, this is very important, this next part I show you here. I don't know how many of you guys watch my main channel, which is called Financial Education. I'm sure, at least 50% of you guys here on the Reaction channel, you know about my main channel, Financial Education, right? And I did a video 4 days ago on the channel called Stock Market Meltup 2.0 is coming, prepare now, right? And in that video, what was one of the main points I made was it's, a lot of times when the market's performing very good, which guess what? It's been a great year in the market. It's been a great year. Many times fund managers run into situations where they're significantly underperforming the S&P 500 and the NASDAQ, right? And a lot of these fund managers, their benchmark, which is the thing they kind of compare themselves to, and when they put out their end of year investment report to their investors, they say, here's how we did versus S&P 500. If you are showing you got, let's say, a 10% return and the S&P 500 got a 25% return, you look really bad to your investors. And any investor that invests in your fund or whatever, right? Let's say you got a hedge fund, they're going to be looking at you and like, hey, why am I paying you a 2 and 20 to get 10% when I could have just been the S&P 500 got 25%, right? So what happens is fund managers start having to play catch up to the market. Now, additionally, when you had a really good year in the market, guess what people don't want to do? They don't really want to sell stocks. And why would they not? Well, because you sell stocks now, you go ahead and pay gains on that in a few months from now. Versus wait till the first quarter of the year, of next year, right? And then go ahead and sell some stocks if you want to sell some stocks, right? And take profits then. And then you can worry about your taxes over a year from now. So the moral of the story is, if you're going to be a fund manager and you got to play catch up to the market, where are you going to look? Guess where you're going to look? I just showed you where you're going to look. You're going to look to the Qs. That's where you're going to look if you're a fund manager. If you're going to look individual stocks, then you're probably going to be looking at Nvidia here over this next, like if you told me I had to play catch up to the S&P 500, I would be like, okay, what am I going to do over the next 5 weeks? I'm going to probably load up on Nvidia. I'm going to probably load up on Palantir. I'm going to probably load up on the Qs in general, those sorts of things, right? And if you're loading up on the Qs, you're going to be loading up on Palantir, right? So that's something to kind of keep in mind there. You're going to be loading up on the stocks that are the hot ones that are likely to try to get that alpha before end of year to try to look better to your investors, right? So this is something that's very, very important for everybody to keep in mind here, and why Palantir could still be, honestly looking good into the year end. I think after year end, then we'll see. Then we'll see what happens after that. But I got to say, the setup's decent here into year end. When you talk about getting in the NASDAQ, getting in the Qs, when you talk about fund managers likely having to play catch up, when you talk about a lot of investors aren't going to want to take profits. And also remember, in Palantir stock, a lot of retail investors in that, right? A lot of retail investors don't want to take any profits on Palantir because they believe it's going to be a $500 billion market cap, a $1 trillion market cap. And so Palantir being a $100-something billion market cap, they're like, why would I sell now? So that's just more thought there, right? Now, let me run you through, because now people are kind of thinking about when's the next time the stock doubles and goes to 120 plus. Well, let me show you exactly when that's going to be, okay? So what we're looking at here, this is a feature I have on 1000xstocks.com. This is my favorite feature we have on 1000x. We have a lot of great features on there, but this is my favorite. And this is our projections feature. And so what it basically does is it takes kind of what analysts are expecting for the current year we're in, which is 2024, as far as net income expectations, revenue expectations, right? But then I can plug in my own custom revenue growth, net income growth I'm expecting for the company, PE ratios, and then it will spit me out what the stock price should likely be, somewhere around there, right? So this is kind of an ultra bull case for Palantir. This is what some investors believe is actually going to happen. But I would call it, my personal opinion, this is a very ultra bullish case. Basically, investors now are thinking, because Palantir's growth rate has been accelerating. A lot of investors are starting to believe Palantir's going to get to a 40% growth rate. 40%. So let's say they get to 40%, and let's say they can hold that for the next 4 years, right? 2025 through 2028, 40% a year revenue growth. If they do that, then I think net income growth is 60% is in the bag if they were to have revenue growth of 40% on average, because the net income is going to be far outstripping the revenue growth of this company, because so much more of that dollars coming in is going to hit bottom line now at this point in time, right? So if they're doing 40% a year revenue growth, they're doing 60% bottom line, in my opinion, right? Which puts them at net income margins of 36% in 2028. But this is important. If you've got a company growing 40% top line on average in the software space, a SaaS type company, like Palantir would be considered more of a SaaS type company, right? And you got them growing net income 60% a year, you're going to command easily a 100 to a 150 P ratio on that company. Now, if you're talking about a 100 to 150 P ratio on a 40% top line grower and a 60% bottom line, then you're looking at likely 2027 being the year when the stock crosses 120 plus. And you get the next double on the stock. So you got to get through this year, next year, and then at some point in 2027, you essentially hit that next double, right? Once again, I wouldn't bank on that case, but it's a case some folks are starting to run to. This is a little tamed down version of that case there. This is what I would consider kind of a bull case around Palantir. This scenario is they grow 30% revenue on average per year. Now, keep in mind, they just hit 30% and they've been showing acceleration. So it's potential they hit higher than 30% in the short term, but let's just average it out to 30% a year for the next 4 years, right? If they do that, they're probably hitting about 50% net income growth, right? Which puts them around 37% net income margins in 2028. If you've got a company growing at 30% top line, 50% bottom line, more of a SaaS related company, an 80 to a 120 P ratio is very fair given those sorts of growth rates, right? Which means 2028 is when you get your next double for the stock. Now, let me take you through what I actually expect personally for Palantir. As a shareholders company for the last couple of years now, somebody's done very well in the stock. Let me show you what I'm expecting. This is what I'm personally expecting for Palantir at this point in time. So this is my base case for Palantir. I expect the company to grow 37% in 2025. I think they're going to continue to accelerate growth here in the short term, meaning the next year. And then I think at some point in time, back half of next year or into 2026, I think that's when you start to actually have some deceleration of the growth rate. Keep in mind, deceleration of the growth rate for anybody that's a newer investor of the market that's watching this, that doesn't mean that the company goes negative in regards to their revenue. That just means the rate of growth slows substantially, right? So I've been growing revenue 37% in 2025, 33% revenue growth in 2026, 30% in 2027, and 27% in 2028. Now, I would have them growing 60% bottom line in 2025, 50% in 2026, 45% in 2027, and 40% in 2028. My scenario has them getting to 34% net income margins in 2028, which I don't think is crazy. I don't think that's crazy. Look at a lot of, more developed SaaS companies and look at their net income margins and you'll be like, hey, that's actually doable for Palantir here, right? Now, if we're talking about this, the P ratio is going to command, basically the P ratio that Palantir will be able to command will go down over the coming years, right? We're probably my guess is this year and next year, we're probably in peak P ratio land for Palantir in regards to what type of P ratio Palantir commands, okay? And I think that will slowly go down over the coming years. So in 2028, if they're growing 27% top line, 40% bottom line, as more of a SaaS-related company, 80 to 100 PE is pretty fair for a company that has those sorts of growth rates in this space, which means actually in my base case here, 2028 should be a year where the stock likely hits that 120 plus level. So that would be a double up there. So the moral of the story is, if you're talking about the next double for Palantir and the stock goes well over 120, at the earliest, you're probably looking 2027-ish, right? Somewhere around there. I think realistically, you're probably looking at more toward 2028. That's my guess. Now, there's also another scenario where, the company stock just continues to go crazy, even if they're not hitting these sorts of growth rates. And that's always a potential. But I like to think about it in terms of what would be a fair PE for the stock, given growth rates, given the sector they're in. So that's kind of the way I think about it, right? I mean, technically, Palantir could be $120 today. It could be $1,000 today. Any stock could technically trade at any price, but we got to be somewhat realistic about this, right? So that's kind of my thoughts here. And that's why the further the stock pushes into year end, the tougher the setup is for major gains over the coming years, right? So that's just, a little food for thought in regards to that, in regards to Palantir, right? How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area. All right, let's react to some videos.
Another Trump administration with talk of tariffs and tax cuts and so much more for investors to consider. On that note, let's bring in Liz Young-Thomas, SoFi's head of investment strategy, with me here at Post 9. It's good to see you.
Good to see you, too.
I'm just going to remind you, we'll break away and go to the White House if we see the president.
I hope she's got some SoFi options that she was granted over time and still holds them. Woo-wee!
But how you're thinking about the market today, which is doing a pretty darn good job brushing off news of more tariffs, at least what the president-elect is talking about.
Yeah, I mean, if you tuned in right now, you'd look at this and say it's kind of a boring day, flattish to up. But knowing the news that we came into the morning with, knowing that the market was down and volatile earlier in the day, and then seeing where it is now, I think is just further proof that this has been a rally of sentiment. This has been a rally that can last, and people want reasons to buy. And there continues to be a bid for a lot of different sectors, many sectors now almost in overbought territory, but almost brushing that off as well. So it doesn't really matter if they're in overbought territory. People still have appetite to buy equities. So the tariff talk today, I think what we're going to continue hearing is a lot of severity in the proposals, but then softening in the execution when it actually happens. And I think that's part of why the market is brushing this off. Also, even if the China tariffs do go into effect, these are not a surprise. This is almost exactly what most people expected. And perhaps they go into effect immediately when Trump gets inaugurated. But again, not a surprise.
I was going to say to you.
So listen. In regards to this whole tariff situation, she is 100% on the ball when it comes to that. And that's why the market's not freaking out, right? You heard about the news. Trump's talking about 25% tariffs on everything coming from Canada, everything coming from Mexico, right? You know, if you're going to throw out a lot of threats, you want to do it when you're not in office, right? Because it gets, you know, other countries thinking, ooh, is he serious? Like, what should we do? What should we do to counter this? You know, you start coming to the negotiation table, right? That's Trump's playbook 101. Right? That's Trump's playbook 101. So that's why the market's not freaking out over that. Is it possible Trump does those sorts of tariffs? That's potential. But there's a potential, there's a lot of negotiations that end up transpiring, going on, that it never ends up being like that. Or maybe it's a 25% tariff, but it's only on a few items that come from Canada or a few items that come from Mexico, right? So that's why the market doesn't flip out over that and knows kind of Trump's game. We've seen Trump in office before. So the market knows the games Trump plays, and that is what that is, right?
We've sort of seen this movie before.
Correct.
Exactly.
None of
That's
this
a good way of
comes
putting it.
as a
Seen this movie
surprise.
before.
President-elect Trump campaigned on this, and the market was going up knowing full well that tariffs were likely anyway. Whether this is the first salvo in a prolonged negotiation,
that's right,
we'll find out. But the market certainly doesn't seem to be too concerned about that. On the note that you said about, so many different sectors have seen gains, if not record highs, right? Bank of America Securities today talks about the highest inflows that they've seen since September, that clients bought stocks in 9 of 11 sectors, led by comm services, tech, financials, and discretionary. Others are talking about a huge move higher in cyclical names. That was Savita at Bank of America today as well. Is that the kind of thing that we should continue to look for, those areas of the market to do the best?
I think that 2025 will end up being a positive year, but more muted returns broadly and not as concentrated as what we've seen for the last 2 years.
Why do you say more muted returns? If there's all this optimism about, a pickup in growth, using the pickup in growth to get at the deficit, you increase oil production. I mean, I'm just saying what the expected policies and things that will be championed by a new Treasury Secretary are going to be. If there's a lot of optimism about that, why are gains muted?
Yeah. So for one thing, we came into 2024, and this is a question that I asked myself thinking about writing the 2025 outlook, right? Can we have another 2024? And what's different about coming into this year than what was different about last year? We came into 2024 with the expectation of 6 to 7 cuts by the Fed. We're going to end up with maybe 4, and right now 2 more priced in. 2 more priced in for 2025. So less monetary loosening, right? Less wind at the back from that perspective. We also are coming into it with valuations at a higher level, but not just in certain sectors. They've gone up, as we've already discussed, across a number of sectors because of all of the appetite for buying. So there just isn't quite as much room. And when you look at things like valuations, now they're a terrible timing mechanism, but there's something that you have to look at over the long term.